Hey, Steve, Jamie, how's it going?
Hey, thanks, Scott. Steve, what's going on over there, my man? Happy Monday.
Oh, happy Monday. As we discussed earlier, it is a Monday. It feels like a Monday, but great to be here.
And what a Monday it was. And welcome, everybody, to another edition of Office Hours. Glad you take the time to come hear what we have to say here. So without further ado, welcome. June is almost in the books. July is upon us. And before we get going here, just a quick word to make the lawyers sleep a little bit easier. And just want to please don't misconstrue it as investment advice. If you do need someone to give you investment advice, probably want to seek out a registered investment advisor or someone like a Series 7 licensed stockbroker. Buy and sell and invest with you guys, show you how to use the technology that we've been a part of since 2003. So if you do need investment advice, please seek out somebody that's licensed to do that. Always like to take a little bit of time up here at the top of the hour to let the new people know about the community that we fostered around the technology that is TI Pro. And I got my trusty pin here, Steve. I'm getting more proficient at it. And you can see up here, subscriber to get in there, meeting room. Now, moving right along here, of course, today you get myself and Steve with Office Hours. Steve's going to take the helm for tomorrow, Trade of the Week. Andy Lindeloff's going to ride shotgun with him. And then we like to change it up just a little bit, bring in Dan, our CEO, and our support session, starting at 12 p.m. Eastern and going into a 1 to the YouTube channel, support session each and every weekday, starting at 12. Of course, accounts have been exploding as of lately. Users have been exploding. Our user count has been exploding. Word's getting out. People are liking the software. Therefore, our user base plus module are continuing to go up, progress. A lot of the orange orders convert into blue orders, and that seems to be the case with the past couple of months as well. I know that we're on pace to have a record month as far as live executions go with orders that people are sending IB using Brokerage Plus. So once again, that's feedback, tells us that people are using it. They actually think it's more intuitive than the workstation over at Interactive Brokers. And only caveat right now is you still have to pay commissions over at Interactive Brokers, but we're feverishly working on a couple of different ports of Brokerage Plus to E-Trade and hopefully Thinkorswim, maybe even Tasty Trade coming down the pipeline. But hopefully sooner than later, we will have a connection to a $0 broker dealer that will allow you to use Brokerage Plus. So that's very exciting. And, you know, emphasis on hopefully sooner than later. Keeping with tradition, always like to take a little time up at the top here to let Steve kind of have and all that good stuff. So Steve, if you're ready, I'm just going to kick it over to you.
Well, I better be ready.
That's good.
Good stuff. I mean, not a whole lot. I don't know. The trend has been up, and we have higher lows to prove that. So when you see this type of assumption of the same trend, there's no reason really to believe not. So if you're bearish, you're really holding on to if it's going to work out, a good case to be made for it kept intact. And I like to start off with the Q land, but that tells the story. As I can see, this area is just begging to be. Behavior remains intact and leading us high. No bear case really to be. We're going to be threatening that very shortly, I do believe. Fight it. You're welcome to fight it. On the Dow, same thing. You've got pretty much wedge action happening here, likely to resolve higher, especially it is just underperforming. And you can see in my miners are going to be one to watch here. Just show you what I'm seeing here. And it can no overnight move. You never know if you have a futures account day here. And
There you go. Well, thank you very much, Steve. And yeah, when you pull up the NASDAQ, you're like, it goes. Minutes before the open, and fortunately, it came back up right at the 15-minute post mark. So I was a little, so first time you can spawn it here, excess of $4 billion, and give us an idea of what the market might be up to for the rest of the session. More up bullish, but not bullish by very much. 52% bullish. Above 60, then what I tell myself is that, okay, it's going to be one of those days. Anything goes. There might be some good upside. There might be some good shorts. But whatever it is, you know, the moves are going to be a little chaotic. Might be up good, but before you know it, if you don't take the money, you're back to flat, so forth and so on. Okay, so those were my expectations coming into the session. Now, if you just kind of take a peek at the SPY here, you know, opening candle right here after the first 15 minutes, yeah, we did take a little pop up. We took a little pop up, flattened out, and just kind of hemmed and hawed for the rest of the day. So there was, you know, a little upside action, a little downside action. We did finish higher. So, but, you know, in retrospect, hemming and hawing, a little upside action, a little downside action. So, you know, just now we're going to go, there you go, anything goes. Now, how did Holly turn out today? Keeping in mind that this was the reading, the compare count but week, the risk mode. Now we'll come back around to it. I want everybody keeping in mind that the compare counts were based on risking 100. The flimsy compare count readings, correlation, the compare count readings are over again, leaps and bounds above, moderate, only coming in close to 600. And if we just blindly bought everything and hoped for the best, it would have turned out well today. Can't say that's always the case, but conservative beating out aggressive mode even today to the tune of about 30-something%. Let's see, hold on. Aggressive 1,000, a little over 1,000, and conservative coming in at 1286.27. So before we move on here, just want to bring up the fact that you might be looking at these numbers up here and wondering, well, why are these numbers so different? Okay, and these numbers are reflective of just taking 100 shares per trade. So in essence, we could just add up the point total here, you know, 250, about 4 points. So if we were taking 100 shares with no slippage, if we hit everything on the money, that's $400, roughly speaking. But down here, we're looking at the totals based on risking $100 per trade and having the system where the AI sizes up with the appropriate shares to ensure that stop level. Hopefully in the not too distant future, these will be reflective of whichever risk mode we choose to reflect. All right, so always like to take a moment to talk about the ability to, you know, when we're interacting with the AI, to potentially extract some of the spread between moderate profit and conservative profit here. So let's talk about some of those trades first. And I'm going to go ahead and sort by moderate profit by this column here. And if anybody's having problems seeing, we're talking about this column right here. Got it sorted by moderate profit. And we can see here, some of the trades didn't do so well in conservative mode, like $34 on ARWR. Ramble actually lost a little bit of money there. So we've got a decent spread between conservative and moderate profit here. First, we're looking back in retrospect what has happened, but when these are unfolding in real time, it's a little bit different of a story here. So basically, we're going to be looking at these three trades right here, ARYA, ARWR, and Ramble, and talking about how we might be able to extract some of that spread in real time as these things are unfolding. So we're going to look at ARYA first here. The AI getting busy pretty early on in the session, about 20 minutes in, we get the buy signal here on ARYA. Kind of hems and haws around the entry signal, and then gets a nice little boost in that second 15-minute period. And this arrow right here, corresponding with the shaded area, is where the AI exited the trade in conservative mode. And we can see here, the reason was profit save. Profit save and reduce risk, what I like to refer to as two of the audibles that the AI can call. The other three factors in conservative mode are, hey, if a profit target gets hit, stop loss gets hit, or the timed hold gets hit, then the AI does what it was programmed to do and gets us out of the trade. The two audibles make for a total of 5 different reasons why the AI could close the trade out in conservative mode. So this one, you know, I guess if we looked at the 5-minute chart, maybe we had a little flattening out there, corresponding with the wick there. But the bottom line is the thing took a nice little pullback, and if I had to term profit save and reduce risk in a different way, they're like a modified trailing stop. So the AI uses profit save, gets us out right here. But when we're looking at these candles right here, I mean, we've just been going up straight, 3 consecutive candles. So we could have ignored the AI's exit signal. And had we done that, we probably almost would have gained a doubler heading into the close, just holding it, not really doing anything other than not exiting with the AI. Actually, a little more of a profit opportunity up here on that candle about an hour before the close. But if we held all the way to the close, took a little bit more risk, 182 bucks based on a $100 risk versus 100 there. Next one was ARWR. Oops, get my pointer back there. There we go. All right, a couple of things I really like about what transpired in ARWR. Same old song and dance here, except this was the this exit reason was the timed exit. If we check out the strategy that signaled the trade, got dough wants to go. Where are you hiding it down there? Okay, we can see right here, this strategy was designed around 120-minute, a 2-hour hold time. Signal comes right here after we had the nice little run up, got a little consolidation for about 45 minutes or so there, and the AI calls the buy signal 38.21 right here. And then we just get a nice little uptrend here. 45 minutes of uptrend, then we get a little over an hour of consolidation here. So this arrow right here, this little area right here is where the AI plugs out of it. But I can tell you this, when I see something like this, just consolidating and we're already in the money on an AI trade, to me, this area right here looks like a really good time to add to a position. You know, we've been in it, we're up, we're doing a little consolidation sideways here, and we can see volume comes back into it a little bit. We pop through that level right there and we head higher. So you might have heard, you know, just through some of the trading 101 rules, you know, cut your losses when you're supposed to, let your winners run, and, you know, add to your winners at the appropriate time. Of course, that's not always the easiest time to decipher. When should I add to something? Well, statistical probability brought it to us right here. We're in the money, we're going sideways here. Candles are tightening up. We break that that range right there. Would have been a great time to add to that position and even outperform the AI, not only in holding the trade when the AI got out, just doing that alone, we would have really had a multiplier here, 34 bucks versus 135 bucks, and that's without adding to the trade at all. If we added to the trade, we could have really outperformed the AI on this P&L on ARWR. So hopefully that makes sense to you guys. And then this one right here, I guess as far as, here's my pointer again, a big difference. I mean, the AI actually took a small loser here, lost $11.95 on a reduced risk that we can see right here. So, you know, this one almost stopped us out, but hey, almost only counts in horseshoes and hand grenades and probably a few other things out there. So, you know, that's why we have hard stops. We place our bet. If it stops us out, so be it. If it doesn't, great. And in this case, it came very close, but there was no stop out. So after the AI set this wiggle here and we get all the way over here, AI pulls the plug on, once again, reduce risk. Now, having said that, once we see action like this happening, one wick, shorter wick, another long wick, and then we get this little, that's a very bullish sign to me, all right? So in any one of these candles right here, once we see the stop out get teased and it just doesn't, it can't get there, then, you know, also the thought should come into your mind, hey, we just had a 45-minute period here. We had these 3 candles where, you know, the stop got tickled, didn't get hit. You know, after you saw this one, and maybe as this candle is forming, hey, that might be a good add too. You know, everyone's a little bit different, but when you see those stop levels come close, but no cigar, that can also be a good time to add a little size back to your original position. And you can see in this case, it would have worked out quite nicely. Thing about that is when you're picking off shares down in these levels right here, you're getting a much better price than the AI. and you can even stick to the original stop so you get a better price and you're risking less. And that holds true whether you just saw the the stop loss coming close. You're looking at the blot and you're thinking to yourself, this one's about to get stopped out, but it never did. Ooh, strong strength, reclaiming that 10-period average. I can get a better price, risk less. And it's all about just watching the AI as these things come out, using the AI. There's a lot of different ways, a lot of different perceptions of how the AI should be used, and it's going to vary from individual to individual. What we're about to talk about next will kind of illuminate that topic, because Steve and I were just talking before the webinar began. I'm like, you could sit 10 people down and tell them to interact with the AI, and you're probably going to get 10 different results, right? Hopefully, if we set 10 people down with today's action, they would have all made money. Maybe somebody made a lot more than the other, or somebody just barely made money. But based on your perception and, I guess, market experience and time in the chair and reading charts, probably going to get different results. So those are 3 good examples of ignoring the AI's exit signals and different ways to play the AI, using it more or less as just another high quality information stream, just like any of our other top list or windows. But the kicker here is that all of these entries are statistically weighted. Okay, so what I did today is I interacted with the AI in paper mode as well. Everything that came out, I let it make the entries. And then I managed the exits today. And the results are pretty interesting. So before we get going here, I just want to show everybody in my risk mode here, if I go into edit long instructions, and these are going to be the same for the short plays as well. I ran this in moderate risk mode. That's typically what I use. You can pick the best of or conservative, but I'm more just the temperament. My temperament is running in moderate risk mode. And just to rehash what moderate is, we talked about the 5 different reasons why the AI can exit in conservative mode. But in moderate mode, we just put the stop loss in. If the stop gets hit, the trade gets frozen. Otherwise, it stays in the trade until we close it, or it closes out towards the end of the session, assuming the stop does not get hit. So all of these trade or these entries were made in moderate mode, and you're going to see the results are pretty interesting here. Keeping in mind, I'm risking $100 per trade in these trades as well, just like I've got my AI set to over here. So if we look at moderate mode for the AI, we can see it finished at 593. And of course, these numbers don't contain any slippage, which there typically is slippage even in the paper mode as well. But look at my tally here. I ran mine in moderate mode, but I managed the exits. AI finished close to 600, but I pulled out almost 900, 881 to be exact. Now, if I compare these P&Ls, and I tell you what, let's just go ahead and sort these by alphabetical, and we'll get this guy set up in alphabetical too. We'll just take a look at my results versus, let's just push this down a little bit so we can take a peek at the charts as well. Okay, so ANAB, moderate mode, the AI made $50.55. What did Jamie do? Jamie only pulled $27.40 out of that one. ARWR, $36.68, where the moderate profit was $135.82. So already, just looking at these two, I made less dough than the AI than the AI did. What about ARYA? Coming in at moderate mode, and I guess just put my ticker or my pin back here. Looking at ARYA, $182, and I came in a little ahead of that one at 212. Now, here we can see when I click on my Brokerage Plus, all my cells up here. And when we're looking at the daily over here, was I basing my exits strictly on what I'm seeing on the technical aspects, right? Not really. You know, keep in mind, circling back around to my compare counts, I was just pretty much of the mindset this morning, once I get up a certain amount, I'm going to take half off the table and probably set my stop loss back to break even or just a little bit above or a little bit below it. It was very simple. There wasn't a whole lot of rocket science going on there. Now, here's a big difference in this one right here, FRG. I'm just going to skip around a little bit. Notice in conservative mode, the AI pegged it perfectly right up here, getting out at this level up here. But look at moderate mode. Moderate mode, it let it come all the way back and it basically got stopped out. Whereas mine right here, I made 317 bucks on that one because of my exit, okay? So a lot of times, if you look at the daily, it's going to help you, and it's just going to be kind of glaring here. So based on my expectations, thinking, you know, it's going to be kind of a wishy-washy market. Hey, we're looking at the daily over here. This was the high that it put in, you know, butting all the way back up to this wick over here from December of 2019. So I'm just thinking to myself, you know, it might get a little bit more, but hey, on a day like today, I'll take that all day. Okay, so there's a big difference there between what the AI finished in FRG in moderate mode versus what I posted here. Let's look at OPES as well. OPES, same thing. This was a short, which the AI pretty much knocked it out of the park. Had a very nice exit on that one. Why did that one get filled? Profit save. One of the rare instances where the profit save kind of picked the bottom, not quite the bottom, but close enough. But moderate mode, once again, showing a loss, right? Whereas I pulled 162 bucks out of that one, all right? Just because of my perception, what I thought it might do. Let's see, this was another good example here, all right? SINT. Notice I only lost $12.61 on this short, where the AI got stopped out, okay? Now this is another one that just basically kind of comes into experience, all right? The initial AI, let's see, I gotta click on that to get the proper arrows, okay. We can see right here, AI buying it right up here at this level here. We go up, we're profitable, we come back down, we close this 15-minute candle here, so I'm thinking to myself, as this one's playing out, notice the big gap up that we had over here. Pretty significant gap up down here at what, 73 cents. Thing topped out at almost $3 today. So I'm thinking to myself, as I see this one go against me, I'm thinking, okay, if this little level right here gets broken, I'm going to flip it. I'm going to go from long, taking a loss, and then I'm going to open up a short position. All right. We've even got a nice button for that in the Brokerage Plus. You know, you just click on it and hit reverse. Boom. Now instead of being long, you're short. So that was my thinking on that. That's classic trade around. Hey, that one's not working. I tell you what, this looks good. We got a big gap here to contend with. Volume was really cranking in this stock today. Look at where we finished on relative volume, 108.91. Okay, this thing was not messing around today. Usually trades, what do we got there? 1.49 million, kicked out almost 142 million shares. That's some float turning over right there, ladies and gentlemen. But the bottom line is I was able to cover up those losses and just lose a little bit on SINT. So the interesting thing here is that on some of the trades where the AI made big money, I lost, and on some of the ones where it got stopped out, I made decent change. But all in all, when you total up these columns right here, we get 881, and in moderate mode, AI only finished shortly, just a little bit under 600 bucks. So, you know, keep that in mind as you progress and interact with the AI. Take the entries as they come, size it up on the charts, you know, try different things out. You know, this 50-50 methodology, you know, it works, okay? Once you get up maybe half or 1R, you know, if we're risking $100 per trade and you get up 100 bucks, you're just like, you know what? I don't know what's gonna happen, but I'm going to take half the profit. I'm going to set my second half back to stop, break even, and just see what happens. You know, just get a method down. It doesn't have to be very complex. What I did today was relatively simple. Some basic chart reading, just some basic risk management, letting the AI make the entries, and me just worrying about risk management. And this was the result that I got today. So technically, in moderate mode, I outperformed the AI. Now, had I ran everything in conservative mode, I would have done a lot better, but hey, hindsight is always 20/20, and for a day like today, you know, I'll take that. All right, Steve, any questions I need to address before we move on to the next topic here? I see Liliana's questions there. Can we reverse any transactions that were made by mistake on the paper trading brokers platform?
No, we can
Well,
only reset the buying power and reset the account, everything.
right. Yeah. If that's what he means, when the session is live, you can flip any position that you have on your blotter by using the reverse. But yeah, if it was done, you know, if there was a demo trade on your blotter from days ago, I guess you could reverse it, but maybe I'm misunderstanding the question there. Well, Liliana, I bet I know what happened when you try to put that stop in. And the question where the statement was, I went to put in a stop on a position and it immediately closed the position. So if that's the case, here we can see, you know, when I click on something, it loads the symbol up, and on here I could submit my price or whatever. But if you're going to use these fields to set a stop price, then what you have to do is blank out the price field. And I really hate it when it does that. And then put your stop price over here, okay? So MYOV, let's see, last trade on MYOV was 18.10. Let's say our stop price was 17.49. We would have to put the stop price in here and make sure that this price field is blank, and then hit the sell or the buy. It would put your stop loss in at that price. Or when a position is open, the easier way to do it is to right click on an open position. Of course, I'm not getting that right now because these positions aren't open. But when you have an open position, you can right click and just add the stop loss through the right click menu. Or you can do it manually by inserting your stop price here. But if you do use these fields down here, and believe me, I've fallen victim to this a couple of different times, you have to make sure the price field is blank and have your stop price in, then hit the buy or the sell button. So hopefully that's what you were experiencing there, Liliana. Okie dokie. All right, so let me just do a little time check here. I wanted to save a little time towards the end here for some back testing, and we got just enough time for that. And just want to say that back testing doesn't have to be real complex. It can be, but a lot of the times we can just find some good basis to start with. So what I want to show you guys today is I took one of my favorite momentum windows, this guy right here, and I said, you know what? I know there's probably some good trades in here, but what can I do to enhance this window and hopefully come up with a decent back test, and not a finished back test, mind you. You'll see right here, turbo brakes 4 billion optimized with room. It's kind of like being at Starbucks. Hey, you want room for cream? Sure. Okay, we'll leave a little bit out so you can adjust it. And when we're done with this optimization, there's still going to be a lot of trades, but you're going to be looking at a pretty juicy data set. So therein lies the in-room part. It's going to be a nice template for you guys to go in there and see if you can find additional filters to add using the optimization tab to get this thing screwed down to a nice trade level where you might be able to use it as an effective strategy. So it'll be a nice little boilerplate for you guys to play around with here. So first and foremost, if we just take a look at the basic guts of this window here, it's pretty simple. We're looking for stocks under at 150 or under 150. Want a little juice on the relative volume. 1 being normal, we're asking for 1.2. We're weeding out the ETFs and iShares with the earnings per share filter. and we're foregoing the traditional volume metrics and just saying market cap's got to be 4 billion. That's typically going to produce liquid names with not too big of spreads. And then we're asking for the classic signature of the turbo brakes as these things are hitting highs. Got to be doing at least 3 times or greater volume on the 1 minute time frame. So what I did to start out is we bring up the back tester, and I just started with 45 minutes into the open. We're gearing this up for a swing trade. So we're going to be exiting at the market open day after tomorrow. You know, roughly getting a day and a half in there. Steve, you know where that comes from. You.
Yep.
We're not going to be using a stop loss at first, and we're going to be doing 40 days. So let me just check my time here. Yep, we're going to omit the first 15 minutes. And we can see we're almost done here. So we're just pretty basic stuff in there, just as is. Winning more than a coin flip, which is a good sign. And the hamsters have finished the computations, and here's what we got. So just on a first time scan, hey, we've got some green in there, so that leads me to believe that there might be something to work with. We just take a quick glance over here at the daily over a 40-day period. Yeah, we got more green on top. We got some intermittent red down here, but let's see what we can do here. So first and foremost, hop right over to the optimization tab. What I always like to do is go to the time, okay, and see we were looking at 50-minute intervals there. Let's just shrink this down to 10. You know, I like to get it to where we can see kind of the whole field here towards the end of the day. So a quick note here, we're not going to worry about this time down here, but just keep in mind, you will probably, if you haven't already, run into things like this in the future when you're back testing. So just keep in mind, theoretically, you can make 2 different versions of this window. One that takes trades 15 minutes into the open and goes till, you know, 9-ish. And you could have a whole separate version to explore these trades over here, although we don't have a whole lot, but hey, don't necessarily have to have a whole lot to make a different, you know, a morning version and an evening version. So we could easily just say, all right, well, this seems to be the period of productivity, so let's stop this thing at 9:39. Don't need to go the whole day. This is our window of potential entry right here. All right. Now we're going to pop right back in here and just take a look at that time of day. And we've got just a little bit more information here. Now, would it make sense to, you know, stop it at 9:24? We'd lose a good handful of trades, but we might lose these guys here. So I'm just going to ignore that guy right there. You know, we'll take the good with the bad. Next, what I did is I went to the optimization other tab and found my position in 10-day range. There we go. Let's see, position, or let's see here, change position. Maybe it might change from 10 period. There we go, not position, but change. All right, change from the 10 period daily. Where you at? There we go. Okay. Yeah, let's just put this in intervals of 10 here. Okay, so looking at intervals of 10 as a percentage basis, kind of that sticks out like a sore thumb here. When the 10 period SMA min max are in these levels right here, it seems to be productive. What if we shrunk it down a little bit more? All right, so could omit these right here because not really dealing with 1 and 2 trade counts, but things get really juicy in this little period right here. So this might be a good change to make. We'll set the min value to -15. And we can come down here and set max value to positive almost 15. So creating a little book in there. Once we do that, we're going to rerun. And let's just make sure the changes are sticking in there. There we go. All right. And then we're going to kick it one more time. All right, so we're making progress on our win percentage here, which is not looking too shabby, above 60% now. We've got a decent spread between average winner and loser. And remember, we're not even using a stop loss right now, okay? And we're still coming out with a positive spread between average winner and loser. Not really worrying about this equity level right here. We could try to dial it in, but the numbers are still going to look pretty good. Let's see here. We'd have to be just a little bit higher before that turns white. There we go. But still looking at some reasonable expectations here. All right, so lastly, what I did here on this one is I went to the composite rating. Let's see here. Stock composite rating. There we go. Okay. Looking pretty good there. Huh. Okay. All right, I got to cheat a little bit here because I could have swore on the last one. Okay, this is the first one that I did, so let's go in there and check out what I got for composite rating. Okay, I capped it at 74.99. So that was the final step here. And what we're going to do here is take a peek. And what I'm going to do is I'm going to drop this link into the chat area for you guys so you can save it and then continue to work on it, because you're going to notice here we've got a nice little data set here. Okay, so in its final form here, let's just go back and walk through and check our work here. All right, we've got the change from the 10-day capped right there. We've got, oh yeah, I forgot, I added the 15-minute RSI as well for optimization. I got a little bit ahead of myself. And then I added the stock composite rating. All right, so other than the start and end time, all I did was add the 10 period, the 15-minute RSI, and the stock composite rating. And what we've got here is a nice little data set with a lot of trades in it over a 40-day period, with a really decent profit factor, a nice spread between average winner and loser, all while not using a stop loss, okay? So that leaves a lot of room in there for you guys. We can take this equity on down to go in there and peruse the optimization filter list, which, like I said, I only messed around with 3, so there's the entire filter set that you can use to try to improve this thing. And with the data set looking this good, I think you guys might be able to put some nice finishing touches on this and get down to a manageable trade count. Now, high winning percentage at present, but what if we did come in here and use a stop loss? And I'm just going to pick something at complete random right now and just say, what if you use the $1.50 stop loss? Well, in keeping with tradition, you're probably going to see success rate come down, but not come down that much, and see the spread between average winner and loser gain a little bit of traction there, I think. Yep, we sure did. 50 cents here, and now we've got almost 70 cents there. So I think there's a lot of room in this one, guys. It's a nice boilerplate with a lot of trades in there, and with a little elbow grease, roll up your sleeves and get in there. I'm going to leave you guys with this, and hopefully you guys can find some good stuff in there and actually use it. All right, so that link has been dropped into the chat panel. A nice little boilerplate, and as Steve was pointing out earlier, in the overall markets, if we do consolidate, or if we do resolve this wedge with a move higher, then this thing should continue to produce, right? Of course, there are no guarantees but this one's looking very good as far as the potential goes. All you have to do is get in there and look for some of your favorite filters. There's some additional optimizations in there, and I think you're going to find some pretty juicy stuff in this scan right here. And I do believe we are at the top of the hour here. So looks like Steve's been doing a great job keeping the questions answered. And Scott, it's about that time. If you're ready to walk us on out, I believe we're ready for you.
Great. Thanks, Jamie. Thanks, everyone.
Sure.
Yeah, a couple items on the way out just to run through before you guys go. We have a new ebook that we launched this year. It's great for earnings seasons. It tells you how to use earnings season to your advantage. There's also some scans in there that you can grab the cloud links for and put them into your own layouts. trade-ideas.com/earnings is the location. Just go there and plug in your email address to get the download sent to your email. There's a podcast. Going to have a new one out pretty soon, and get ready for that by searching for Trade Ideas Podcast wherever you listen to your pods and add us as a subscription. Got Holly Summer is a code that's good for 15% off the first month or year of any Trade Ideas subscription or upgrade from standard to premium. We're not case sensitive anymore, so as long as you spell it right, it will work. Holly Summer. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. Facebook.com/TradeIdeasPro is the Facebook page to like and share with your friends. And any questions at all, send them to info@trade-ideas.com. That goes into our help desk software and is the best way to get help. So we did record this. We're going to have the recording up later on tonight or tomorrow, and you get an email reminder tomorrow about how to find it. All right, thanks, Jamie. Thanks, Steve.
Thank you, Scott. Thanks, everybody in attendance. Thank you, Steve, and we'll see all you guys tomorrow. And happy trading. Bye-bye.